If the reduced funding for the South African National Defence Force is impacting operations to combat illegal activities at the border. The chairperson of the Joint Standing Committee on Defence, Dr. Malusi Gigaba, says they are committed to ensuring that all the challenges facing the army are dealt with effectively.
We have been in the province since Monday, interacting with various stakeholders on a number of challenges that the SANDF is facing in the province. We are on an oversight visit of both the Joint Standing Committee on Defence as well as the Portfolio Committee on Defence and Military Veterans. We are today meeting with the SANDF and are going to visit the border post to inspect for ourselves the border patrol challenges.
Lastly, India's Supreme Court has permitted the use of low-emission firecrackers during the Diwali festival in Delhi. The National Capital Territory is one of the world's most polluted capitals. The 5-day festival, known as the Festival of Lights, will be celebrated from the 20th of October. The BBC's Sasha Shitta.
Raila Odinga was a towering figure in Kenyan and African politics, inspiring a generation across sub-Saharan Africa. The son of freedom fighter Jaramogi Oginga Odinga, Kenya's first vice president.
We do apologize for playing the wrong sound there. Now recapping on your top stories, Madagascar's new military ruler, Colonel Michael Randrianarina, will be sworn in as president in the coming days. This follows a coup that he led to oust President Andre Rajoelina. Now, for any news stories you'd like to share with us, please send us an email to newsroom@channelafrica.co.za or call us at +27 11 714 4459. Channel Africa News, I'm Oneli Tsinzi.
SABC News, the African perspective.
And coming up in your sports news this hour, the South African Football Association, as well as renowned sports French wear brand Le Coq Sportif, announced the conclusion of their 5-year partnership, while the Professional Fighters League announced a multi-year strategic partnership with Sporty Group. I'll tell you more details at 4:30.
Good afternoon to you, Senegal. Good afternoon to you, Eritrea, Kenya. Good afternoon to you, Democratic Republic of Congo, Zimbabwe. Good afternoon, Africa. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. This is where you get the African perspective. It's where we meet to look at the latest in news, sport and business. Coming up this afternoon, we focus on the South African automotive industry, which continues to experience great pressure. A large number of reasons, one of them being the 30% tariffs that have been meted on the country via the United States, and also the increasing number of imports of Japanese and Chinese cars. And also the latest on the SA-China deal, with South Africa moving to expand its export footprint as trade tensions with the United States continue. It's exactly 6 minutes after 4 p.m. Central African time. Looking forward to engaging with you as we usually do on the various social media platforms. On X, Instagram and YouTube, you'll find us at Channel Africa 1. On Facebook, we are at Channel Africa.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We begin here this afternoon. The global economy is expected to grow at a rate of 3.2% this year, while uncertainty about its stability as well as its trajectory remain acute. That's the word from the October update of the World Economic Outlook report produced by the International Monetary Fund ahead of its annual meeting of finance ministers and central bank governors in Washington next week. The IMF projected global growth in April at 2.8%, at the time citing a reordering of policy priorities as well as uncertainties and intensifying downside risks amid escalating trade tensions and financial market adjustments. But as Sherwin Bryce Peace reports, the global economy is adjusting, pointing to some extremes of higher tariffs being tempered amid subsequent trade deals as well as resets. But he also warns that the overall environment remains volatile.
The latest growth rate of 3.2% for 2025 is an upward revision, with the IMF saying the global economy is adjusting to a landscape reshaped by new policy measures, most notably from the United States, with a warning that prolonged uncertainty, more protectionism, and labour supply shocks could reduce growth. Pierre-Olivier Gourinchas is the IMF's chief economist.
Global growth is holding steady despite major policy shifts. The increase in tariffs and its effect has been smaller than expected so far. This is thanks to new trade deals, multiple exemptions, and the private sector's agility in rerouting supply chains. As a result, global growth is now projected at 3.2% this year and 3.1% next year, only a modest downgrade from last October. Yet, beneath the steady surface, complex forces are at work. Easy financial conditions and a weaker dollar, fiscal stimulus in some major countries, and surging artificial intelligence investment are all shaping activity and inflation dynamic.
With the rapid growth of and investment in artificial intelligence looming large, particularly in more developed economies, some concern of a potential dot-com style correction as experienced in the late 1990s. That could be triggered by disappointing results on earnings and productivity gains in the sector, as Gourinchas explains.
Risks remain tilted to the downside. The AI surge could trigger a sharp market correction if profit expectations do not materialize. Fiscal pressures are mounting across many countries and may interact with financial market fragilities to further raise borrowing costs and increase rollover risks. And institutional credibility, particularly central bank independence, faces growing political pressures that could de-anchor inflation expectations. Still, there are upside risks too: a faster resolution of trade tensions, an associated reduction in uncertainty, as well as the potential for significant productivity gains from AI, could all give global growth a meaningful boost.
Policymakers urge to restore confidence through credible, transparent and sustainable policies, with trade diplomacy paired with macroeconomic adjustments, as the WEO report calls for central bank independence to be preserved.
Policies should aim to restore confidence and predictability, stabilize trade relations, reduce uncertainty, and rebuild fiscal space credibly. Monetary policy should remain independent, yet transparent and tailored, with a key objective to maintain price stability. Over the longer term, economies should invest in innovation, productivity, and multilateral cooperation, empowering private enterprise and favoring horizontal policies like education, infrastructure, and smart regulation over costly sectoral subsidies.
The United States, the world's largest economy, expected to grow at 2%, up from April's estimate of 1.8%. China at 4.8%, up from 4%. And South Africa expected to grow at 1.1%, up from April's forecast of 1%. The report also encouraged efforts to improve longer-term prospects as key, and that while macroeconomic stability is a necessary precondition, governments should ensure that private entrepreneurs are able to innovate, thrive, and generate the growth of tomorrow. It also called for the strengthening of multilateral frameworks and institutions that have helped deliver considerable gains over the past decade, and that recent geopolitical tensions highlight how the need for an adaptive and pragmatic multilateral system is even greater than before. I'm Sherwin Bryce Peace in New York.
It is exactly 12 minutes after 4 p.m. Central African time. Also coming up this afternoon, we are going to be looking at the automotive sector in South Africa, its performance after a period of extreme pressure. Also coming up is the latest on the SA-China deal. And as we do this time every single week, we also feature our information on debt reform, our finance feature. And today we'll be looking at a total of 165 organizations who've written a letter to the President, Cyril Ramaphosa of South Africa, criticizing the country for failing to make progress on debt sustainability issues. And this is during its presidency of the G20 major economies. That's just part of what we have on the agenda for you this afternoon on Africa in Business.
Africa. It's time to plug into the heartbeat of the continent. Tune in to Channel Africa, your go-to radio station that broadcasts in 5 different languages.
L'Afrique du Sud célèbre la journée nationale du
Kabla hujaitwa kwa jina la Double K
or more of our forests have been destroyed.
Tamo kutuli bwanji ndi
Partido Africano da Independência da Guiné.
See, Channel Africa represents every corner of this amazing land. From Lagos to Cape Town, Nairobi to Dakar, we've got you covered with the freshest news, music, and cultures. So, turn up the volume, feel the rhythm. Enjoy the conversation. Channel Africa, the African perspective. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 14 minutes after 4 p.m. Central African time. A total of 165 organizations in a letter to South African President Cyril Ramaphosa have criticized the South African economy, or rather South African country, for failing to make progress on debt sustainability issues during its presidency of the G20 major economies. The organizations urged Ramaphosa to push for reforms before it hands over the G20 presidency to the United States on the 1st of December. The letter, released on the first day of the annual International Monetary Fund and World Bank meetings in Washington, the 165 groups called for the cancellation of all unsustainable and illegitimate debts from all creditors to protect funds needed for education, health, gender equality, as well as climate resilience. For more on this, we joined on the line by Jason Braganza, the Executive Director at the African Forum and Network on Debt and Development, AFRODAD. A very good afternoon to you, Jason. Welcome to Africa in Business.
Thank you so much for having me on your show. A pleasure to be with you.
Could you first and foremost take us through some of the demands or the proposed debt reforms that have been tabled before the South African president?
Yes, certainly. If you'd allow me first, if you just a couple of seconds just to extend my deepest sympathies and condolences to the family and the Kenyan citizens following the demise of the Right Honorable Raila Amolo Odinga, who passed away earlier this week. The continent has lost a true Pan-African, and it is important that we recognize this big loss to our continent and to our country, Kenya. So I just wanted to take this brief opportunity to extend my deepest sympathies to his family and to our fellow Kenyans and the continent for this immense loss.
Certainly, thank you.
Now, to answer your question about the demands, well, the genesis really is that we've got close to half of the African continent that is in a situation of a debt crisis. We have close to 24 African countries that are paying more in debt servicing than they are in investments in education. We have close to 8 or 9 countries that are paying more in debt servicing than they are in investments in health. And when you think about the South Africa's G20 presidency and what some of the priorities are for the transformation of the continent, if we are putting away money taking away money from these very critical sectors and putting it towards debt servicing, then we are actually undermining the transformation agenda that is part of South Africa's presidency of the G20, but more importantly, the long-term transformation of Africa's continent as espoused in Agenda 2063. And so part of the requests that we are making, or the demands that we are making to the South African government, is to be more progressive, more pragmatic in bringing together the various options that civil society groups, academia, different expert commissions have put on the table that bring all creditors and borrowers together to find a lasting and sustainable, more democratic way of resolving the debt crisis in Africa and across the global south.
And the debt crisis is a major concern for Africa. But it's less than 2 months now before South Africa hands over the presidency to the United States. Could you talk us through the efforts that you've made before this time in order to have this tabled on the agenda? Is this not perhaps a bit too late?
No, not at all. I mean, the important thing to remember with the G20 is that it is a process. There is a handover that will take place to the US and subsequently after the US to the United Kingdom. And so what the presidency of South Africa has the opportunity to do is to hand over a set of reform proposals and a process and start a process of the reform of the debt architecture and more immediate proposals on dealing with the debt crisis that many African countries are experiencing right now. So there is an important opportunity for us to lay the foundations through the South African presidency and hand that over to the US and subsequently the UK presidency in 26-27 so that these processes can continue. And I think that is what civil society organizations, the 165 organizations that you have mentioned that signed on to this letter, are trying to do. We are not expecting that.
Go ahead, sir, please.
We are not expecting all the reforms to be initiated between now and the summit in November, but really it's a commitment, a political commitment by the South African presidency to put this on the table and to convince its partners within the G20 to take this on as an agenda for reforming the debt and addressing the debt crisis that many African countries are facing.
You did mention putting pressure on G20 member states, but beyond that, how are you persuading the private creditors to support these reforms?
I think the important part is to remember that everybody needs to come out of any restructuring or any reorganizing of a country's debt or a borrower's debt in a way that everyone benefits. I think there shouldn't be a situation where we are, as a country and as a continent, we are prioritizing, servicing debt and making sure creditors are fine and are okay, while citizens are actually suffering and the continent at large is undermining its own transformation agenda, its own ability to finance its own growth and development and economic transformation. So there is a lot of pressure that's being put on private creditors, particularly in Europe and the Americas, through the development of legislation that can be used in the state of New York, for example, in the US, and in the city of London in the United Kingdom, that can actually help protect both creditors and borrowers when they go to international capital markets to issue or to receive private capital such as Eurobonds and sovereign bonds and the like. So we are trying to put pressure also on members of the G20 where a large sum of private creditors tend to have their headquarters or tend to operate out of.
You are also calling for a declaration from the finance ministers, a declaration that explicitly supports the establishment of an African credit rating agency. How will this assist in dealing with the ballooning African debt and the unfavorable debt conditions that we've been discussing?
Well, you've touched on your last point in your question about the high cost of debt. And one of the reasons that African countries are really struggling with the cost of capital is that on average it costs up to 4 times the amount in terms of interest to borrow from, let's say, international capital markets as it would for a country that's in Latin America or Asia. And so these very high costs of borrowing are putting enormous pressure on African governments. And a lot of the reasons for this high cost of borrowing comes from the establishment of a very monopolistic credit ratings system, which is dominated by the big 3 agencies out of the US and Europe. Now, what an African credit rating agency would do is to act as a counterbalance and a counter set of analysis that takes into account the peculiarities of the African continent in supporting a more fairer, transparent set of ratings, which is currently not happening. And this is what we are asking the ministers of finance in their declaration. One of the things we're asking them to consider
yes,
is to support.
Jason, unfortunately, we are going to have to leave it there. Our line is, very compromised and breaking up there towards the end. So we do apologize for ending that prematurely. But we also thank you for your insight. We did get the majority of that towards the end. Thank you, sir.
Thank you so much for having me.
Thank you. That's Jason Braganza, the Executive Director at the African Forum and Network on Debt and Development, AfroDad. He takes us to exactly 23 minutes after 4.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
Channel Africa will be live at the 14th Oppenheimer Research Conference, a leading platform for natural and environmental science. Convened by Oppenheimer Generations Research and Conservation, it brings together top scientists, policymakers and conservationists looking to advance solutions to global environmental crises in an ever-changing world. Channel Africa is on the ground and will be interviewing some of the leading African voices, shaping meaningful approaches to some of Africa's most pressing challenges. Do stay tuned.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 24 minutes after 4 p.m. Central African Time. Now, South Africa is moving to expand its export footprint as trade tensions with the United States continue. A new deal with China to export 5 types of stone fruit marks a significant shift in agricultural trade strategy. But how far can such agreements go in shielding South Africa from global tariff pressures? To discuss this, we joined this afternoon by the Executive Director at the Trade and Industrial Policy Institute, TIPS, in South Africa, Dr. Saul Living. A very good afternoon to you, Doctor. Welcome.
Good afternoon. Thank you.
So what does this deal with China actually signal about South Africa's broader trade strategy?
It signals quite an important shift in how we're approaching our agriculture exports. So what we've seen, and I think the Deputy Minister of Trade and Industry raised these issues yesterday when he was talking to exporters at their export week, where we need to diversify across a broad range of markets. And what's actually held us back is often not having these agreements in place. Because if you're an agricultural producer and you want to export, you need certain bilateral agreements to be undertaken between the two countries. And if those are in place, then you can export into their country.
And
so, by signing this agreement, it opens up the space for this product to be exported, but also importantly, the signal that more is to come for other products.
We've seen over the past few months just how volatile the trade environment has been with the United States. As far as South Africa's exposure is concerned, how vulnerable is the country and specifically its agricultural sector to these shifts in U.S. trade policy?
Agriculture and autos are probably the two hardest hit by the shifts, or there are some others in machinery and equipment, but agriculture is certainly one of the harder sectors that are hit by the US shift. And it is a surprise to everyone watching all of this because we a different hemisphere, the seasonal issues means that when we're growing oranges, they're not growing oranges, and so we can export products to them off season. So the agricultural tariffs are a surprise because it means for their consumers, they're just not going to be getting their off-season fruit at reasonable prices. It's going to 30% tariff is a lot to pay extra. And some consumers will just say no. So we will then, as a result, see a shift in US consumers' consumption patterns. I like to joke that they're going to move from oranges to Oros because they're not going to be able to afford the extra 30% tariff. So I think it's going to be critically important for our agricultural producers in particular to start looking for those new markets. And government has a key role to enable that through signing such agreements.
And how sustainable, though, is this exporting of agricultural goods to China? Could China become a key long-term market for South African produce, or could this be viewed more as a short-term fix?
No, it's definitely a long-term shift. I mean, we see the number of consumers there are in China. It's 3 times that of the US. And China are focusing increasingly on consumption-led growth. They did the export-led growth. They've gotten to a particular level where they can start seeing internal markets as a way of growing their incomes and through their own consumers. So we're going to see we've already seen it in China, a very different strategy to what they were doing 15, 20 years ago. And that impacts on the levels of growth in China and how they are focusing on their imports and what they're exporting. But what it means for us is once we have entry into those markets and our products gain acceptance, then it's a potentially a very long road that we can go down. And the rapid growth in China is going to be very important as a market, particularly for products that they wouldn't be able to otherwise get in their market.
And what other regions or perhaps other trade blocks should South Africa be targeting in order to diversify the export market?
Increasingly, we're going to need to look at Asian markets, so outside of China, but also some of the other Asian countries. So things like wine, where we already do have some presence. We're going to see our wine exporters being quite hard hit by the US tariffs. They're also facing their own internal constraints because they've lost a big market share because they're not exporting their own alcoholic products to Canada, for example. So our wine is going to have a difficult time in the US market, and the Trump administration is going to say, well, we need to support our own local wine manufacturers. So our wine producers, and it's going to be particular farmers or distilleries that are focused on the US market. So not all of them, but there are some brands that have got a presence in the US market. They're going to have to shift and find new markets. And Asia does become a huge opportunity. There is a desire for South African wines. We've got a reputation that we can build on, but it does mean building the markets. And it's not easy to build a new market. You have to go to the trade shows. You have to get your product into ordinary stores across the country, which means distribution and all of those complexities of getting into a new market. But once we're there, then you slowly build the consumer base to get into that market on a long-term basis.
Dr. Saul Levine, we thank you so much for your insight and your time this afternoon.
Pleasure. Bye.
Thank you, sir. Bye-bye now. That was Dr. Saul Levine, the Executive Director at the Trade and Industrial Policy Institute, which is known as TIPS in South Africa. So these stone fruit that we're making reference to that form part of this export deal between South Africa and China include apricots, peaches, nectarines, plums, and prunes. So those are the 5 stone fruit that are listed in this particular trade deal. It's gone exactly 4:31 Central African time. Let's take you now to the markets desk, where Chanduko Legege is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thank you, Thami. Good afternoon. $1 is trading at 17 Rand 38 in South Africa, in Botswana 13 Pula 28, Namibia 17 Namibian dollars 38, Zambia 22 Kwacha 63. In Kenya, the dollar is 128 shillings 736, Ethiopia 146 birr 765, Uganda 3,000 shilling 427, Tanzania 2,000 shilling 445. $1 in Nigeria is 1,460 naira. In Egypt, 47 Egyptian pound 66. Tunisia, 2 dinar 93. Algeria, 129 dinar 461 Morocco, 90 rand 7. In Angola, the dollar is at 912 kwanza, the Congolese franc at 2,362. And looking at commodities, gold is at $4,193, platinum at $1,642 per ounce. The price of Brent crude oil at $62.77 a barrel. That is all from me. For any business stories you'd like to share with us, please send us an email to newsroom@channelafrica.co.za, or you can call us on +27 117144459. For Channel Africa Business, I am Chanduko Ligege.
Business news on Channel Africa. The African perspective.
And for the latest from the business of sport, here is Musibudi Makura.
Sports on Channel Africa. The African perspective.
Thank you so much, Thami. A very good afternoon from the sports desk. Now, the South African Football Association, as well as renowned French sportswear brand Le Coq Sportif, have announced the conclusion of their 5-year partnership set to officially end in December of 2025. Now, launched just prior to the global COVID-19 pandemic, the collaboration has been defined by landmark achievements as well as powerful moments in South African football. Together, SAFA, as well as Le Coq Sportif, celebrated Banyana Banyana's historic victory at the 2022 CAF Women's Champions League of Women's Africa Cup of Nations tournament, as well as their qualification to the 2023 FIFA Women's World Cup in Australia, as well as New Zealand. A standout initiative during this period was the launch of the special edition Black Kit, aimed at raising awareness of gender-based violence, and it was worn by Banyana Banyana as they made history by reaching the round of 16 at the FIFA World Cup for the very first time in 2023. Now, the partnership also championed fan engagement as well as creativity through the Designed by You competition, which saw South African designer Lwazi Cedric win the opportunity to design the national team jersey. Now, the first of its kind initiative reflected South Africa's values of inclusion, empowerment, as well as collaboration. Another iconic moment came with the unveiling of the silver ivory kit worn by Bafana Bafana during their bronze medal campaign at the 2024 Africa Cup of Nations tournament in Cote d'Ivoire. The kit also symbolized innovation and a bold departure from traditional natural colors. Additionally, the pink kit worn by Banyana Banyana in their high-profile match against England supported the Pink Drive campaign, raising awareness of breast cancer, as well as showcasing football's potential drive of social change. Further afield now, Tottenham Hotspur's majority owners ENIC have invested an extra $133.87 million into the club as they now aim to drive long-term sporting success. Now, the capital injection comes after months as Spurs said they received and rejected two preliminary expressions of interest for a possible takeover and insisted the North London club was not for sale. Now, speculation about a possible change of ownership had increased since Executive Chairman Daniel Levy stepped down after almost 25 years in the post. Now, former Manchester City financial advisor Stefan Brosson explains what this cash injection means for the ownership of Tottenham Hotspur.
But interestingly, it probably actually increases the ownership of ENIC in the club. And ironically, actually slightly increases the indirect ownership of Daniel Levy. So if you go on the Tottenham Hotspur website, you see that what must have happened is that money must have been put in at ENIC level as debt rather than equity, which means that Daniel Levy would not have needed to put his hand in his pocket initially. But what that also means is that when that money flows down into Tottenham Hotspur, they actually increase their ownership of Tottenham Hotspur.
Onto the story now. The Professional Fighters League have announced a multi-year strategic partnership with the global consumer internet as well as media company Sporty Group, with a focus on the fast-growing, youthful and energetic continent of Africa. Now, the PFL will benefit from Sporty Group's vast experience and in-market reach, both in the build-up to its groundbreaking PFL Africa competition as well as fan engagement with this global content. As part of the partnership, Sporty Group will empower the PFL through its various complementary brands. Now, Sporty TV will also act as a key broadcast as well as digital distribution platform for PFL content across Nigeria, Ghana, Kenya, as well as South Africa. Now, SportyGroup.com will also cover its competitions, news, as well as results. Sporty Studios will then produce special shows that will then enable Sporty TV as well as Sporty.com to tell the PFL stories that inspire with stunning footage as well as creative ideas live from Africa. Meanwhile, Sporty Bet will support PFL Africa as its official betting sponsor. And finally, Alexi Ohanen is expanding his investment portfolio in women's sport with a new stake in professional women's volleyball. Now, League One Volleyball announced earlier today that the American Ohanen's investment firm 776 will lead the ownership group of a new professional team known as the LOVB Los Angeles Volleyball. Now, the investment also comes as volleyball has been a rapid growth across all levels of play. Financial terms of the deal has not been disclosed yet. Now, the American, who's married to tennis legend Serena Williams, is also an investor in two other California teams, that is the NWSL's Angel City FC as well as the TGL's LA Golf Club. Well, it concludes your sports news this afternoon on Channel Africa. For any sports stories you'd like to share with us, our email address is newsroom@channelafrica.co.za or call us on +27 11714 4459. For Channel Africa Sport, I am Mosibudi Makura.
Sports on Channel Africa. The African perspective.
It is exactly 39 minutes after 4 p.m. Central African time. Now, in an exclusive interview with Channel Africa, the Zambian Member of Parliament, Honorable Chanda Katotobwe, has highlighted that Africa loses an estimated $90 billion each year to illicit financial flows. Speaking at the African Parliamentary Network on Illicit Financial Flows and Taxation Continental Conference, which is currently underway in Johannesburg, South Africa, which is being held under the theme A Decade of Combating Illicit Financial Flows and Advancing Tax Justice, Reflection, Innovation and Political Will. He urged African leaders to demonstrate greater unity and translate political will into concrete action.
It's a critical aspect which affects us globally. And, Africa, even within SADC, the illicit financial flows have harmed economies. Depending on the structure of African economies or third world countries' economies, the conversation around illicit financial flows is a conversation which should have started taking place 20, 30, 40 years ago, because it's at the core of the welfare of our people. If African governments want to have our people lead, noble, luxurious lives because of the resources which Africa possesses, there's no starting point than tackling illicit financial flows. The welfare of our people in Africa is largely, poor, characterized by poverty, poor, health services, poor education system. Our governments continue grappling with limited fiscal space. They can't, collect enough revenue to support the industrialization or development of Africa.
About continuing pushing, what are you seeing on the ground? Is it getting worse or is it getting better? And what is it that we're missing? And what would it take for a body like this one to perhaps be part of the legislative processes to make sure that we do achieve what you guys are tabling here?
It's political will. It's political will. It's awareness of our people. It's the level of sensitization on this scourge has been very poor. Traditionally, Africa is been propagated to be corrupt governments, and that's why our social services are poor because of corruption. But when you go to the statistics, corruption across Africa must be accounting for less than 5%, at the highest 5%. But the illicit, it's negligible. But the illicit financial flows account for 60%, 70%. So the numbers, traditionally, if you have noble, global citizens saying, can we be fair? They'll put more energy on halting the illicit financial flows, which would benefit Africa. We're being told, Africa loses 90 billion, annually, 90 billion United States dollars. So the money that's coming from these, IMF, World Bank, and what have you, is actually our own money. Now, we must get started. Africa's gone through a lot. We need to be getting organized as African leaders.
Honorable Chanda, just before I let you go, you are a politician, you're in parliament, and you're talking about a political will. What type of political will are you advocating for that has actions? Because it does seem as though your colleagues, there's no commitment in terms of pushing that political will. What is it that you're advocating for? I know that you're here. It means that there is that commitment, but it would have made sense for us to have more than 10 parliamentarians from your country to come and talk about the same issues. What is it that you are advocating for, and what are some of the tangible actions that you're calling for from your colleagues?
That's a good one. In Zambia, in Parliament, we have over 50 parliamentarians who belong to the African Parliamentary Network on Illicit Financial Flows. So I think it's one of the most subscribed, caucus under the Zambian Parliament. Yes, we may not have had, 10 people, 10 parliamentarians come, or 20, or the whole 50. It was not practical. But in terms of specifics, it's African leaders must be deliberate. It's affirmative action. It's affirmative action to empower our people to own real wealth by running these extractive industries, as opposed to leaving them in multinationals.
That was Zambian Member of Parliament, Honourable Chanda Katotobwe, speaking to Channel Africa's economics reporter Innocent Samosa. That takes us to exactly 44 minutes after 4.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
Now, the South African economy appears to be maintaining some level of momentum. This is despite prevailing headwinds. This is according to the latest Pay Inc. Economic Index, which tracks electronic transactions processed by Pay Inc. The economic index rose for a fifth consecutive month to 102.3 index points in the month of September, which is up 0.2% on August's number. The compilers of the index note that the South African economy continues to show resilience, adding that there was no single factor driving the latest number. Nompumelelo Siziba reports.
A combination of lower inflation, interest rates and a real increase in salaries, as well as lower fuel costs, have served to aid in improving the climate for economic activity. Independent economist Elise Kruger says these factors have helped in maintaining resilience, but warns that the economy remains fragile, pegging that growth will only be around 1.1% this year.
Though we're seeing resilience and we're not falling off a cliff or moving into negative territory, we're also not seeing a scenario where we can create jobs in South Africa because the economy is just still too weak and the growth rate is still too low. And on the contrary, we're actually seeing some job losses being announced.
While the economic index was moving in the right direction, Kruger pointed out that the main headwind globally has been the US import tariffs, the effects of which have still yet to be seen, with South Africa currently heavily hit by 30% tariffs. with local headwinds also affecting sentiment.
We also have our structural issues in terms of the underperformance of our rail and ports that are still a hampering factor for economic growth. So all of those, are in combination still giving us a fairly difficult business environment. And from the point of view, to look at the index and still see some growth from month to month, in my view, is really speaking to the resilience of businesses despite all these challenges that we are experiencing.
Kruger says more downward rate action would be great for the economy, but despite some of the economic headwinds, she doubts the Reserve Bank will make any moves on rates for the balance of the year.
As much as I think the lower interest rate scenario is one of the tailwinds at the moment for the economy, it would be great to see further cuts. But it's not my base case to see a further cut from the Reserve Bank at this point in time, as consumer inflation is at this point moving upwards from levels that were quite low for us for the past 6 months. We are now moving into higher numbers towards 4% into the end of the year, early next year. So in terms of trajectory of headline CPI, I would be surprised for the bank to cut rates at this coming meeting.
The latest index comes a day after ratings agency Moody's praised South Africa to grow by 1% this year and 1.6% in 2026, warning that it expected the country's debt levels to remain elevated. Nompamela Losiziba, SABC News, Johannesburg.
Hi there. Do you want to elevate your business and give it a voice in South Africa and Africa as a whole? Well, in that case, let Channel Africa make this a possibility. Channel Africa is willing to advertise your business for as little as 30,000 rands or $1,719.18. To get access to these great rates, send all requests to mokoenata@SABC. That's MOKOENATA@SABC. Channel Africa, the African perspective. AUSISA, the Association of Water and Sanitation Institution of South Africa, is a platform uniting Africa's water professionals. This November, Africa leads the conversation on water and sanitation. Join global and African leaders at the AUSISA Africa and Global South Dialogue 2025 from the 9th till the 12th of November at the Emperor's Palace, Johannesburg. From policy innovation, this is where action meets collaboration for a water-secure future. Register today at ausisa-watersan-dialogue.org or follow at Ausisa on social media. Ausisa, working together for sustainable water and sanitation security in Africa. We are on Open Views Audio Bouquet. Channel 628.
It is exactly 4:49 Central African time, and for a look at the latest business and financial market developments this afternoon, we're joined on the line by Lindile Malchas, investment strategist at Absa Investments. Good to have you with us once again, Lindile. Good afternoon.
Good afternoon, Thami, and good afternoon to the listeners.
Perhaps let's jump straight into it with an overview of the latest performance in both global and local markets.
So in terms of market performance, we are seeing in the US, markets opening slightly lower, so continuing from the losses we saw yesterday. In Europe, the picture is a bit mixed. The Euro stocks is trading a bit higher, but then we are seeing the UK market, the FTSE 100 is down. And then look at the Asian stocks, they are in a bit of more positive territory. So decline, rebounding from the declines that we saw yesterday. And then bringing it back to our local markets, they are currently trading up in positive territory. So the Aussie marginally positive, up about 0.1%. We are seeing that these gains are being led by industrials, so seeing some strong performance there. And then financials also being in the green, whilst you are seeing the resources which have been performing quite strongly. They are giving back some of those gains that they saw throughout the week. And then also seeing the local currency, it has been relatively stable so far, but still at strong levels around 17 Rand 30.
Now, we see the earnings season in the United States that's kicked off with major banks releasing their Q3 results. Is there any bank or company that you've been tracking, and what was the key takeaways perhaps from their earnings?
Yes, so in terms of the banks and earnings season, they have set quite a good tone for this season, seeing majority of them delivering quite solid results. And then we are seeing some of that being backed by stronger investment banking activity, so the likes of JP Morgan, Goldman Sachs, and Citigroup. But maybe let's take a look at the biggest one there, which is JP Morgan. So they delivered quite solid results as well. Revenue increasing by 9%, earnings are delivering a 16% growth, so even stronger than what you're seeing with revenue. And you are seeing that interest revenue, that increasing by 2%, but you are seeing that most of that growth is coming from the non-traditional revenue, so the non-interest revenue, that rising by 16%, and it has been also driven by higher asset management fees. As you've seen year to date, markets have been fairly strong as well. Then the company, from a return on equity, which is a key metric for banks, quite strong at around 17%. And markets also tend to look at what the CEO of JP Morgan normally says about his economic outlook. So they're still noting that the US economy is quite resilient, but they are seeing a bit of risks, and those arising from geopolitical tensions, and they're coming against a backdrop of elevated asset prices and also sticky inflation. So we did see markets reacting a bit negatively to that, down about 2% so far. And then on a year-to-date perspective, share price is on a run, up about 26%.
And now taking a look at the mining activity, the South African mining activity, that declined by 0.2% percent year on year in August. And what that does, it reverses that 5.1 year-on-year increase in July. Which are the sectors that contributed to this decline?
Yes, so certainly we did see that mining production figure falling into negative territory, and it was as a result of lower production figures on a year-on-year basis within the platinum group metals, which are the PGMs, gold as well as manganese also. We did see those production declines there on a year-on-year perspective, dragging that number back into a negative territory. But there were some green shoots in terms of the likes of coal, so those were the more positive contributors. And then on a month-on-month basis, which is on numbers that we tend to look at, we also did see that the mining production figures, those erasing the gains from the prior month and falling by about 1.2%.
And what are the other economic releases that the markets are expecting this week?
Yes, so certainly have seen most of those being released, but in the Eurozone, you are expecting the release of the inflation figures. Markets are expecting inflation within the region in September to come in around 2.2%, so relatively stable compared to what you saw in the flash print. So markets not expecting a major change here. And then I think the key thing will be on the earnings season for the third quarter within the US, so markets will certainly be keeping an eye out on that as well.
Awesome. Thank you so much, Lindile Malchas, for the updates today as far as the movements in global and local markets. Looking forward to our chat again next week.
Thanks, Thami.
Thank
Always
you.
Great to talk.
Certainly is. Have a good one. That's Lindile Malchas, his investment strategist at Absa Investment. He takes us to exactly 4:55 Central African time as we recap what we had in store for you this afternoon. We did take a look at the South Africa G20 presidency and the level of discontent that over 100 organizations, actually it's 165 to be more specific, 165 organizations that are complaining to South African President Cyril Ramaphosa, saying that during his presidency of the G20, he hasn't done enough to reform the really high levels of unsustainable and what they call illegitimate debts that are faced by African nations. We spoke there to Afrodad, and this is pressure that they'll continue to put on the South African president during his presidency of the G20, saying that these declarations that they're calling for must be made before South Africa hands over its presidency to the United States in a couple of months' time. We also looked at the latest SA-China deal, which facilitates the export of 5 different pitted fruit or stone fruit. These include nectarines, apricots, etc. to China. And speaking to Dr. Saul Levine, who is executive director at the table and at the Trade and Industrial Policy Institute, saying that this is not just a flash in the pan. It actually is a rather sustainable deal that can be held between the two countries. Well, that's how we wrap up for this edition of Africa in Business, and we hand over now to the French desk where Joël is standing by, ushering us into Vue d'Afrique. Bonjour, madame.
Et bonjour à tous les auditeurs de Channel Africa. Merci de rester connectés parce que tout à l'heure sur Vue d'Afrique, il sera question de Madagascar. Le colonel Michael Randrianirina va assumer les fonctions de président de la République et nous parlerons du Bénin. Au total, 5 candidatures réceptionnées pour la commission électorale nationale. Et aussi du décès d'une crise cardiaque de Raila Odinga, ancien Premier ministre. Nous sommes au Kenya. Merci Thami.
Merci beaucoup. So do restez connectés. This has been your Wednesday edition of Africa in Business. Thank you to our awesome team, our producer Mabo Bulok, our technical producer Tidimalo, social media talent Butelezi, sport Musibudi Makura, economics desk Chanduko Ligege, and on the news desk Onelen Nzenze. I'm Thami Ngubeni. We shall see you again once again tomorrow, same time, same place, for the latest on African Business.